I'm Peter Davies. I work for Lansdowne Partners and have been running global equity funds for about 25 years now. We run a global equity mandate, largely investing in companies of $5 billion or more. It's deliberately flexible. We don't like to be pigeonholed as doing one thing or actually even doing it in one area. We invest in many parts of the world. For the last decade, we've been dominantly investing in US equities, but that's now changing, and much more of our investments in Europe. Investment opportunities in stock markets usually are because something's changing in the real world. Obviously what we've seen in the last decade is massive new technology platforms emerge, which thankfully we've benefited from in the Witan portfolio. And demand, will change for different things, and we've got to be on top of that. And often what's more interesting still is when industry structures themselves are changing, when the supply side is changing. A large position in the portfolio at the moment is the airline industry, and actually demand isn't really changing there. Demand's always been growing for airlines. What's changing radically, we believe, is that the way in which airlines are being managed is very different. It's being managed to make money for shareholders and investors. And when those things change, that has a huge impact, we believe, for shareholders even. And so change is a big thing we're looking for. So we have about somewhere around 25 companies in the portfolio at any one time. The two things we vary it by are, one, how risky the company is. There are some companies, an early stage technology company where in reality we could be wrong, and we can't have as much in that as, even if we would think it's a really good investment, we can't have as much in that as a company that's got lots of, property or something like that backing it. So we vary it based on riskiness. And then the other thing we vary it on is what else have we got in the portfolio. There are quite a lot of industries that have been around for a long time, which actually perhaps haven't had the attention, because so much attention's been focused on technology. Investors perhaps aren't looking at those to the same degree. And what we're finding is companies like BP that we've just started investing in, having 6-7% dividend yields when bond yields are 1%, but actually being much better companies than they were 10-15 years ago. It's a really interesting time in the portfolio at the moment because it's changing, and I think the new opportunities we've got, while they're a bit less flamboyant perhaps than the ones that the Amazons and the Googles that drove the portfolio for the last 5 years. If we just invested in one kind of share, we couldn't make the kind of transition we're talking about now. And those transitions, I think, are what you need in a world that's changing very quickly and a market that learns very quickly.